Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, the Australian dollar is showing some recovery after two consecutive down days, a slightly firmer bias to the start of the week as the US dollar came under renewed pressure following softer US inflation data, reinforcing expectations that the Federal Reserve will leave interest rates unchanged at its July meeting. The Aussie also found support after the People's Bank of China left its benchmark lending rates unchanged, signalling stability in Australia's largest trading partner. However, gains remained measured as rising oil prices and ongoing tensions in the Middle East continue to fuel concerns that higher energy costs could complicate the inflation outlook and limit further US dollar weakness. That would mean that the RBA could actually lift rates if we see inflation increasing, but it really depends on the back of the oil as well. Looking ahead, traders will likely be cautious of Thursday's Australian labour market report, with investors looking to the employment data for further clues on the RBA's policy outlook. Technically, though, the market still remains slightly positive since the break for the midway point, so that would mean we would need to see further gains, but a break of 70.0515 would be the trigger to fuel the rally on to 71 cents. Until then, we could get a pullback to the lows of 69. Turning to the euro, a little bit lackluster as you can see by the technicals. Nevertheless, still could see a little bit more bias to the upside if we get a break above 115, figure 15. But presently, trading on the lower side of the range after two consecutive down days, the market is still likely to find support above the level of 113.5 and likely a little bit higher to 114.20. However, any pullback likely to be limited and the upside could progress further, with all eyes looking to this week's European Central Bank's ECB meeting, where policymakers are widely expected to leave interest rates unchanged at 2.4%. Turning to dollar yen, we're still maintaining above this 162 level and still not able to break above that 162.6085, and one intact still poses a threat to the downside. The MACD is still negative and the RSI is still struggling, so we still need a break beneath the level of 161.80 to trigger the move down to 160. Turning to sterling, well, the market is a little bit mixed as investors assess the appointment of Andy Burnham as the UK's new Prime Minister. Overall, though, no doubt we'll be looking for clarity of the new government's fiscal direction, and also keep an eye on the Bank of England's policy path as well, due to the inflation being where it stands at the moment. Wrapping up with commodities, well, the market is still pressed by that trend line, which now comes in around 4,030.45. Keep an eye on this level, because if we see a break, it could trigger a 250-point rally. Overall, though, while intact, we still should not rule out tests to the downside, but the key level is still around that base at 3,935 to 55. Having reached the target of $81 a barrel, the next target now is $85 a barrel, and reassess from there. That being said, though, I've outlined, and if we see a break beneath 78.65, would negate the bullish call from 85 and instead leave me neutral in the short term. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new week.